Welcome back. Well, nothing much to report on the markets at this point in time. It's down 55 on the Sensex. Nifty is a tad below 5,100. But we are really talking about very, very small ranges. The markets, so to speak, are flat, waiting and watching for a lot of cues that are expected. Inflation tomorrow, Greek elections over the weekend, RBI action on Monday. So understandably, it's a quiet period after a lot of activity has already gone in over the past 10 days or so. Let's shift to personal finance, an evergreen area of interest. Joining us now as an expert is Roongta of apnapaisa.com, and our first caller is with us. Yes, Gautam Agarwal is calling from Kolkata. Go ahead, Gautam. What is your question?
Hello.
Yes, Gautam, we are here.
Yeah, I want to invest 30,000 lump sum in mutual funds. So, could you please recommend where should I allocate the money, and in which mutual funds?
Can you give us a little about yourself? What are your dependents? What is the kind of money you are looking at over what period?
See, currently, I'm already investing through SIPs and mutual funds, and I've got 4 dependents.
Okay.
So I would be investing for a long term to create the wealth, which could be used for my children education or for my child marriage. Okay.
Could you also tell us anything about insurance policies that you may have?
Yeah, insurance. Already I have got a term insurance policy of around 60 lakhs. Sum assured is 60 lakhs. And plus I've got some endowment policies for 8 to 10 lakhs.
All right. It's nice to hear that you have taken a term policy. In any case, over to you, Harsh.
Gautam, just one more quick question. I mean, what's your income level, and do you have health insurance?
No, I don't have health insurance, but since I'm working in a company, so it has been insured through my company as a group insurance.
Right. And what's your income level, Gautam?
Income is around 10 lakhs per annum.
Okay. So for the kind of income that you have, unless you have a lot of assets, so it's very difficult to comment, but unless you have a lot of assets, the 60 lakh cover that you have is not completely sufficient. So you probably need to enhance that to about 1 crore or so, and obviously you know the way to do it through through an online term plan clearly. As far as this 30,000 lump sum is concerned, you have a long-term view. Maybe 5 to if you have a 10-year view, then it's probably a little different. But if you have a 5-year view, I would recommend, since the amount is not very large, I would recommend a lump sum investment in a balanced fund. You could choose between an HDFC Prudence or a Reliance Regular Saving balanced fund. But essentially, for a 5-year horizon, that's what I would recommend, given the amount that you are planning to invest.
And if it's a 10-year frame?
If it's a 10-year frame, you can afford to go a little more aggressive. You can look at large cap and equity diversified funds rather than go for the relative safety of a balanced fund. So you could look at Franklin Blue Chip or HDFC Top 200, HDFC Equity, DSP BlackRock Top 100. I mean, you can take and pick a choose among one fund out of these. I mean, depending on the amount that you want to invest.
Okay, that's the advice coming in on Gautam. Just hold your thoughts, Harsh. We'll be back with you. Time for a break, and we'll solve more of your personal finance queries on the other side. Stay tuned. Welcome back. It's a flat day for the markets at this point in time. It's the European markets in terms of an opening which we should watch out for, and currently the European futures are indicating that it could possibly be a bit of a technical bounce back today as well. Remember that the US markets were strong in terms of a close on a possibility that maybe easing would now occur post the Spanish yields as well as the Italian yields, which indicated a lot of pessimism in the European markets yesterday. The Spanish yields, for example, closed at record closing highs, and the Italian yields to above 6%. So besides the equity space, it's the yields which we should be watching out for once the European markets do open. But let's get back to the personal finance query. Ajit Hinge from Pune calls in. Hi, Ajit.
Yeah, hi.
Hi, what is your query?
Yeah, actually I just want to inquire regarding the mutual funds investments.
Okay, and how much would you like to invest per month via an SIP?
I would like to invest around 2,000 rupees per month via an SIP.
Okay, and what are your current investments in mutual funds or equity exposure at all?
Yeah, I do have equity investments around 60,000 rupees via SIP only.
Okay. All right. And could you just give us more details with regards to other investments? Any sort of insurance policy you have?
Most of the insurance policies are already from my corporate actually. So individual policies are just minimal. You can say two policies I do have. One is of Max New York Life and one is of IDBI Fortis.
Okay. All right. Harsh, over to you. 2,000 rupees per month is what he would like to invest in terms of equity exposure.
So Ajit, how long do you want to invest this for and what's your goal?
It is around. I want to generate some funds for my children's education over a period of time. It will be around 10 to 15 years.
Over a period of 10 to 15 years.
Yeah.
You want to generate funds for your children's education. Well, I think if your time horizon is large, which it is, 10 to 15 years, you should definitely look at a reasonably aggressive portfolio where you can put in about 90% in large cap and diversified equity funds. I mean, we had indicated the fund names in the response to the first question. You can look at Franklin Blue Chip, you can look at HDFC Top 200, DSP BlackRock Top 100. I would advocate, if you don't have any debt exposure, maybe out of this amount about 200 to 300 rupees every month you put aside in a PPF. So about 90% in a equity mutual fund, about 10% in a high yielding debt instrument like a PPF. That I would say would be a good mix. Insurance you should review, because employer provided insurance may not remain with you if you leave your job. Secondly, employers continuously review the cover because it's becoming more expensive. That's something I would advise you to review. Consult a good personal finance advisor and review your entire plan with him. That really would be the advice.
All right, thanks a lot for joining us with those details, Harsh, and thanks Ajit Hinge as well for joining us. Viewers, if you have any personal finance questions, do write to us. Send us an SMS typing YM followed by a space. Your questions, send it to 51818. Alternatively, you can also email your questions to yourmoney@network18online.com.